We'll continue without her. So tax incentives provided for extractive industries. Number one, the Income Tax Act has provided. So the Income Tax Act has provided, but she's not joined us yet. So tax incentives provided for extractive industries. Tax incentives provided for extractive industries. Number one, the Income Tax Act has provided the following deductions. The Income Tax Act has provided the following deductions. The Income Tax Act has provided the following deductions. Number one, allowable deductions or expenses. Allowable deductions or expenses under Section 15. Allowable deductions or expenses under Section 15 of the Income Tax Act. Allowable deductions or expenses under Section 15 of the Income Tax Act. Number two, so number one is allowable deductions or expenses under Section 15 of the Income Tax Act. Number two, customs duty exemptions. Customs duty exemptions. Customs duty exemptions. Customs duty exemptions. Then you explain that point and say all the imported goods for direct use, all the imported goods for direct use in exploration, for direct use in exploration and development. All the imported goods for direct use in exploration and development are exempted from customs duty, except for motor vehicles. Are exempted from customs duty except for motor vehicles. Except for motor vehicles. Number three, VAT exemptions. VAT exemptions, you say the VAT Act has provided for both remission. The VAT Act has provided for both remission and exemption. Has provided for both remission and exemption from VAT, for both remission and exemption from VAT, with respect to goods and services procured. With respect to goods and services procured. With respect to goods and services procured for exploration activities. With respect to goods and services procured for exploration activities. So that is what we call extractive industries. So we'll now look at a few illustrations. But after we take a small break, the first illustration will come from April 2022. So April 2022 as question number 3. April 2022, question number 3. So we'll be looking at that after a short break. April 2022, question 3. I think it's question 3C. For Petro Limited.
So we want to and we will kill so which they nothing so you are kind of like and clean that and Japanese water aku punya orang tua boleh cantik banget orang tua bahwa belum mengenal begitu nggak aku nanti kelas mana jauh gitu kelas apa ini ada ini kalau ini sih kok itu sih kalau seperti
kamu gini ya kan saya mau basic mentor jadi ini ya kan supaya jadi dulu tapi itu ambil panas itu nanti yang mau just root di mana ya phone buat pakai oh iya aku lagi gitu aku ini boleh dibuat share soalnya tadi imagine lama kata anak bisa
coba ini kan aku punya padanya udah lihat kami jadi juga masih kecil spesial apa aku ya rasa keluar semua dari terus itu kayak itu kabilanya wadah soalnya saya this the people menjadi bisa bisa dia mau kasih ini aja perlu baik free aja mas maybe itu usaha meeting connect meeting ada yang tadi yo beli lagi juga bisa tinggal itu pada lagu itu jam itu ya dari bekerja mau ada begitu dari ekspres beli lagi dari buat itu atau yang saya
ini lu apa tadi
Jangan, mana mobil kita juga berapa? Hari sih, iya dari mana lagi lebih betul. Ini tahu tuh ada. Awalnya juga boleh nggak buat, udah baru.
nanya Raffi nanya tanya
Oke boleh.
pakai
So hari sih, ya gini sih ini banyak. Ini kita kah? Boleh apa tuh kita kah? So kayak gitu, kita dapat bisa itu ini udah penting di sini.
So look at April 2022, question 3D C's, right? It says Petro Limited is a company in the business of exploration and production of oil and gas in your country. The company reported a petroleum profit of 143,600 in the year ended. The figure excludes crude oil produced but not sold, valued at 4,200,000. The following expenses comprising capital and the revenue expenditures were deducted in arriving at the reported profit: geophysical staff salaries, legal costs for title deeds, dry hole contributions, drilling and test development costs, capital losses from previous year, memorandum of understanding credit, royalties on domestic sales, royalties on export sales, non-productive rent, customs duty on plant and equipment, purchase of assets for offshore operations, provision for restoration of wealth, petroleum investment allowance. Additional information: petroleum investment allowance included depreciation of equipment of 317,200. Offshore operations included a tractor purchased at 920 for use on site in your country. Computers and computer software is for 780 and 360 respectively for use in the country offices. The offices were partitioned at a cost of 1480. Required a statement of computation of petroleum profit or loss for the accounting period, and then the tax paid. So we'll prepare a statement. So we will need to adjust this profit. The company reported a profit of, so we have a reported profit. So the reported profit is 143. 600. Then you say add back. So geophysical staff salaries is allowable, so we cannot add back that. Legal cost for title deeds relates to capital expenditure, and because that's what we call conveyance fees. So legal costs, these ones relate to title deeds. So we add back 562 and 4. Dry hole contributions. What is called dry hole is guaranteed payments. So there are payments that can be guaranteed even though the petroleum company can drill and they find nothing, you know. And then they agree with the government, they can still claim certain expenses even if they, you know, if you don't strike oil, then you have nothing to claim expenses against. But if the expenses are guaranteed, it means maybe the government will find a way of paying it. So dry hole contributions are allowable because they're like, even if you don't find oil, this dry hole cost will be reimbursed or will be paid. So that's allowable because they've been guaranteed. Drilling and test development costs, that's part of allowable expenses. Now, capital losses from the previous year is also allowable. We said that in this industry, you can bring forward losses indefinitely, right? So even capital losses brought forward will be allowable. Then there is memorandum of understanding credit. This is not an expense as such, but it's an incentive that is granted to petroleum sector the incentive is to encourage more investment. So the government allows them to deduct certain amount, and I think from time to time it will be agreed on what can be taken as memorandum of understanding credit. So it means when they were signing the agreement, they also agree on a memorandum of understanding of what will be provided as an incentive. Now this is deliberately intended to encourage other companies also to invest in the sector. So again, that's allowable, so we cannot add it back. So it's what was agreed. You're allowed to deduct this to motivate others to come also and invest in drilling of petroleum. Royalties on domestic sales, these are costs, and they paid royalties on whatever production which they sold in the domestic market, and that's also allowed as an expense, royalties. Royalties on export sales is also allowable. Then there is non-productive rent. Non-productive rent is expense. I think I need to define this. Let me just put a note on non-productive rent, the meaning. So this is notes, the meaning of non-productive rent. Non-productive rent. Yeah? So non-productive rent means non-productive rent means the amount. Means the amount of any rent. The amount of any rent as to which there is a provision. The amount of any rent as to which there is a provision for its deduction. There is a provision for its deduction. Or royalties. Royalties under an oil prospecting license. And an oil prospecting license or mining lease. To the extent that such rent is not deducted. So there is already a provision for deducting this non-productive rent. It can be deducted. The company can be allowed to offset it against the royalty expense they are paying to the government under any kind of contract. It would be under a prospecting license for an oil prospecting company, a mining lease, as long as that rent had not been claimed or had not yet been deducted, they can go ahead and use it to reduce royalties. In other words, even non-productive rent is already guaranteed, you know. There's already a provision for it. So in the agreement, in the mining or prospecting license or mining lease, there's already agreement that this non-productive rent, we've made a provision, you can claim it. If you don't claim, offset against the lease payments. Whatever you're going to pay, the government has lease offset from there. So it's a guaranteed payment. So again, we cannot add back non-productive rent, but we can add back customs duty on plant and equipment because it's a tax. So customs duty on plant and equipment. So customs duty on plant and equipment is 672.3. Purchase of assets for offshore operations, there was a note. Note 2. Offshore operations included a tractor purchased at 920. We don't know the other assets purchased, so we'll simply add back tractor. So tractor is purchased at 920. Provision for restoration of wealth. We'll also add back provision for restoration of wealth.
Because it's a provision.
Because it's a provision. But I'm divided on this because under the new law, there's an amount that the law requires that the company takes to an account which they're calling an escrow account. There's an amount every year. The law requires they take to an escrow account for purposes of restoration of the site. But I think this one is different. For restoration of site comes when you stop mining. You see, you'll have destroyed the environment. You've dug around. So under the current global practice, you're not supposed to leave the environment like that. That's why they transfer some amount to an escrow account. But I think this one is different. This is to restore a particular well. This is different. So the one I'm talking about is required by law, where out of the profits they make every year, they transfer an amount to an escrow account, and this amount will be specifically used for rehabilitation of the whole site at the end of mining operations, so that you don't leave the environment destroyed. But this is different from this one. This is for a particular well, so just add back provision because it's a provision. Provision for restoration of wealth. This is 1575. This must be different. 1575, provision for restoration of wealth. In petroleum investment allowance, there's a note. Note 1. Petroleum investment allowance includes depreciation of equipment. So add back depreciation of equipment. So depreciation of equipment, they are saying is 378.2. I think that's it. So these are the add backs. Then you see deduct. So what we are going to deduct will include note 2 as a tractor, we'll say investment allowances. So we have a tractor. So the cost of the tractor is 920. So you get 25% of 920, which is how much? Which is 230. Then we have computers and software. So computers alone is 780. So 25% of 780 will be how much? $185. 195. Then you have computer software. Computer software is 360. You multiply by 25%, and that will be 90. Then we have partitions. Partitions is 1480. You take 10%, is 148. So that should give us the adjusted. That should give us the adjusted profit or loss. Which one? The add-backs is 41. 4107.9. Sio ni kubwa sana.
3766.
This inaleta 41. 4107 unasema. 07.9. This one is
663.
663, just like that. So what is our adjusted profit? $147,
044.
044,
89.
89. So that answers the first part of our question. Then we get tax payable. So Roman 2, corporation tax. We simply be 147, 044, 900, we get 30%. Or 113, 470. So that would be our corporation tax. There are no withholding taxes. So as an assignment, you can try November 2015. I think we are meeting this afternoon. This will be question 4. It's called rigs drilling.